I started off the interview asking her, how much further does the Fed have to go?
So I think when we look at the economy today, Steve, we still see imbalances between demand and supply, and that's putting high inflation in play. So we still have high inflation. We saw some easing in the July numbers, but I think it remains broad-based, so there's more work to be done.
Some of your colleagues have said they see a sort of terminal rate of 3.75 to 4%. Others have said above 4%. Which camp do you put yourself in, or neither?
Well, I think for this year, we have 3 more meetings. We know we still have more progress to make. And what I'm really looking for is to say, when do we see the turning point in inflation? When can we begin to see where that terminal rate might rest? Because I don't think we know yet where that may have to settle out, but it will be higher than it is today for sure.
How will you know it when you see it?
So I think you'll see a pretty convincing deceleration in inflation. And I think for me, I will be hearing it in the region. So right now we continue to hear number one concern is a tight labor market, difficulty finding people to work, and that price pressures are still there. They've seen some easing, I think, on supply constraints, but not enough that they can look ahead over the next year and think that isn't still going to be an issue for them.
Is it 3 months in a row of good numbers like we had in July? Is it 4 months in a row that'll give you some confidence?
Well, ultimately, it's getting back to our target. And so I think to see a convincing trend, you'd want to at least see 3 consistent months of data to know where things are. But of course, always doing that in the context of what's going on in the rest of the world.
The market gets obsessed about things like 50 or 75. Do you want to weigh in on what your preference would be for September?
No.
What is the difference in your mind? If you did 50, what are you signaling if you do 75?
Yeah, I think that's hard to explain. Obviously, doing 75 in June and July sets a pace that I think the public is looking for, what changes that would cause you to step down. And I think certainly at some point getting to a steadier, more sustainable pace is going to be important. So I think it's too soon to say, you know, what should we expect in September? Because we have some important data that's coming up.
Could it be more than 75 in your mind or less than 50?
Well, I think after we saw July, I think the real question is, does the July inflation numbers beginning of seeing other easing that will come in months to come? But far from clear, given how broad-based inflation is right now.
Do you still have concerns that raising rates by 75 basis point increments could endanger the effort to reduce the balance sheet?
Well, we certainly have done a lot of interest rate increase in a short amount of time. Nothing I've seen in my time on the FOMC. And I think we should still expect that some of that policy will work with a lag. So we've seen it hit the housing market pretty quickly, but I think its full effects may not be seen for some time. And so keeping that in mind as we move forward with this very expeditious path of rate increases is particularly important to me.
How do you expect it to cool?
So I think the process we've seen a little bit of already. So we've seen in the housing some cooling beginning at that point. I guess when I look at the inflation dynamics right now, though, we have a fundamental imbalance still between supply and demand, and it is very broad-based when we look at the drivers of inflation right now. So what we saw in July, we saw some airfares coming off there. We saw hotel accommodations, car rentals, those kinds of things. But those were pretty specific categories. I think we're going to have to see something more broad-based to begin to know that inflation is coming off its highs.
Does the unemployment rate need to rise to bring down inflation?
So the labor market is very tight. And I suspect to get some loosening in that labor market, you will see higher unemployment.
Is it already a recession, or will it be a recession?
Yeah, so it's an interesting question that comes up because, again, when I talk to contacts in my region, the things I hear would not be consistent with what you might hear during a recession. Difficulty finding labor, a tight labor market, wages rising, adding jobs every chance they get. So that dynamic is not clear yet, despite the fact that we had 2 quarters of negative GDP and added 3 million jobs. So it is an unprecedented kind of situation when you think about recession dynamics.
What does Esther George, the Kansas City Fed president, say? Is it a recession?
I think what we see right now is demand is cooling.
Yeah.
And I'm going to be watching that data very carefully to see how much it brings this imbalance back to something to get inflation down.
If it is a recession, how does that change policy? Or does it?
Well, I think there are always factors that are going to influence our policy that we can't anticipate. For right now, given the dynamics we see in the economy, our charge is pretty clear, and that is to bring inflation back to our target. And that remains the focus, even as we watch what's going on around it. And right now, that seems pretty clear on the path ahead.